Hello, traders. I'm Emily Advani, your host for another edition of the NewsWare's AIQ Markets podcast, where we bring together expert analysis on fundamentals and technical analysis on the financial markets. At NewsWare, we provide the facts, themes, and trading ideas for the day ahead. Couple that with AIQ Systems, which is a leading provider of intelligent technical trading analysis. Its algorithms identify high probability market trend changes, helping users navigate volatile conditions with precision. I'll call that a winning combination. Bill and Steve, we did make an observation that we seem to meet to record following major tariff news. In other words, when things get a little rocky in the markets. It may seem counterintuitive, but it seems to me like that would be the very time that getting this information will allow us to find opportunities even in these hopefully intermittent downturns. Since the last episodes, markets have experienced heightened volatility driven by a rapid sequence of tariff escalations, temporary deals, reductions, of course, some key economic indicators, GDP numbers, inflation numbers, jobs data, and of course, the latest from the Fed. So, Bill, I will start with you. Give us sort of your assessment of market action since our last episode.
But I mean, we continued and we remain in a period of volatility. The markets are highly susceptible to these tariff noise coming out of the White House. I mean, global, tariffs have really come back into focus over the last, 2 months. I mean, we had the announcement in April, then we had the pause, then we had a restart, and then we had the trade deals, and now we're back to where we're putting on tariffs on multiple countries. So this tariff news is continuing to create the volatility in the markets. And I mean, I'm looking at it today. We're down 1.5% on the S&Ps. I mean, this is following his executive orders of imposing tariffs, which are ranging from like 10% to 41% on imports from 92 different countries, including allies like Canada. And you also have to think that, last night President Trump, he outlined a letter that he sent to 17 pharma CEOs saying that they must lower drug prices now. I mean, he's been talking about it. It's been on his agenda, but wow, that's going to be a focal point over the next month and a half, 2 months. Then you got the global situation, global political issues going on that just continuing. I mean, President Trump said he could end the war within 24 hours between Russia and Ukraine, and then he said, I can't do it. Neither one really wants to end this war. And so President Trump the other day, he gave Russia about 10 days, which is approximately August 8th, to start a peace process and reach a deal to end war in Ukraine. If they fail to do it, then he's threatening to impose severe sanctions, including 100% tariffs on Russian oil and secondary sanctions on targeting those countries, that buy Russian exports, such as China and India. So now the whole aspect of what a country's tariff rate would be or is in confusion, and that's what's showing up in the markets. We're really cautious. The markets have always been very quick to react to bad news. I mean, it leads to sharp price moves, and that's what we're seeing today. But I also look at this as an opportunity because I do know that they typically go too far, and it's unjustified. And then you look at the fundamentals, and then you start to see real opportunities start to appear, and that's when big money is made. So we're in a period of heightened volatility. We never really slow down. I mean, it's not as bad as it was in April, but it's still ugly. But that is laying the seeds for opportunities to trade from and profit off of, in my opinion, Emily.
And Bill, we will get to some of those opportunities that you are looking ahead to, taking advantage of the heightened volatility and really kind of keeping your cool in all the caution here. But before we do get there, again, that's Bill Olsen, our trading anchor at NewsWare's Trade Talk. And Bill, you make daily picks on NewsWare's Trade Talk, but here on our NewsWare's AIQ Systems podcast, we're making sort of longer term picks, combining your fundamentals and news-based analysis with Steve Hill's technical analysis. Steve Hill, who's also joining us, CEO of AIQ Systems. And you did make some picks on our last episode. This included some beverage stocks, Pepsi, and some sort of in the transportation umbrella with UPS. So before we look ahead, let's quickly look back. Bill, give us a look at what happened with the picks from the last episode.
Look at the facts. I mean, I did like the transportation sector. I did like the beverage sector. I like the transportation sector because oil was weakening and OPEC was, increasing those, their production. And I thought we'd have a better move, but it still was positive. If you look at it, I called UPS at 96. The stock hit 96 and then it ran 10% and traded over 106 since the last time we had this podcast. And that's a 10% move. You got to take it. You got to call that a win. And, in terms of Pepsi, I did like this. Pepsi is, really starting a new marketing campaign to really try and get more young people to drink soda. And they're doing other beverages besides it. And plus, they're a big producer of snack foods. And I had called for like a 130 entry price. Well, the stock broke the 130 entry price, and then it rallied in there on the earnings. When the earnings came out, the stock just jumped. It actually moved past 147 again, which is more than a 10% gain. So, both of the picks from last episode, saw a 10% move. So yeah, you got to call that positive. You got to be happy with that. You get 10% on two different stocks in 2 months. That's a good deal.
I will take 10% on both of those, Bill. Again, definitely calling those a win. And before we look ahead, I do want to turn over to you, Steve. Taking a look back here, what do you think about what happened with Bill's picks? Is that what you anticipated looking at your analysis?
Yes, thanks, Emily and Bill, for having me on the show again. Yeah, I was looking at, we looked at UPS and that transportation group, which I have within my system here. We looked at a pretty good group area to go into. We were back at the sort of end of May. And since that time, both UPS and also FedEx moved up nicely, both of those stocks. There was one stock within that group that didn't particularly perform well, but even what's the name of the stock here? I'm going to bring it up. There it is. The Expedition International also performs very similar to what FedEx and UPS did, and only C.H. Robinson Worldwide out of the four of the stocks that are in the S&P Air Freight and Logistics really didn't perform well. So it was a good pick. PepsiCo, I remember we talked about that. I think we were also talking about energy drinks and also where PepsiCo was going. PepsiCo kind of moved if you look at it when I'm looking at a more macro view from the end of May, it doesn't look like it went very far, but it did once you zoom in a little bit, because its most recent action, especially after it moved out of a trading range at the end of June, it started to move up and then flattened again. Then it gapped up once we got into the middle of July. And since that period when we were looking at this back in May 30th, about the 130 level, it traded all the way up to 146 and change. So it's been a pretty good move overall for a longer term trade, that's for sure. Obviously, this is what we've seen recently, and then we've seen this with our market timing, is that the market started giving signals to us at the beginning of July, indicating that things were definitely overbought in many, many areas. I've never had so many clusters of early signals saying this is getting near a top. And nothing happened for a while, though. I was waiting for a confirmation from other technical segments in the market to turn over, and that didn't start happening until about a week ago. So we've been watching this very closely, and I think this is, to me, this is a possibility of a great buying opportunity in very select sectors. Once we get a little bit of clarity, if we do get clarity on the tariffs and how it's affecting the market, there's nothing, you cannot anticipate what's going to happen next. All we can do is watch the market and then analyze what it's giving us, and then go and find those particular segments of the market that will give us the best opportunity to make money.
And Steve, you did say, there's some great buying opportunity in select sectors. So we're going to now turn to looking ahead and where those sectors may be, even though we're not necessarily able to find that clarity with the latest trade developments. having this information on hand will at least allow you to play the market movements in the best way that you can. So, Bill, I will turn it back to you. Let's look ahead. Where do you see opportunities upcoming?
I'm kind of looking at the retail sector, and I'm looking at software. I really am. And let me start off by the retail sector. I like Nike, ticker NKE, Nancy, Kilo, Edward. Remember, this stock used to trade, 105 to 120 for the longest period of time. Then the bottom fell out, and it was trading 80 to 90, Then the bottom fell out again. And it actually dipped down, in the $60 range. But now it's really holding firm at the $72 range, except after earnings in June, stock popped up to I think it was trading like over $80. And you look at what the major brokers are saying, they're positive on it. They're all raising price targets. They all like the stock. Think about Nike. Where do they make their shoes? They make their shoes in Vietnam. Listen, the tariff situation was really a dark cloud hanging over Nike for the longest time. It started to lift because Vietnam has gotten, a good tariff deal with the U.S. Nike can live with it. You know what the aspects are. So a lot of that caution, a lot of that nervousness has been taken away. So now they're back to business as usual. And they can start selling shoes. You got the FIFA, you got the World Cup coming up, you got the football season, you got the NBA going to restart. So this is when a lot of sneakers are sold. A lot of apparel is made and purchased. So yeah, I like Nike. I got to get it at the right price. I'm thinking like 71. I think it could drop down for 70. So, between 70, 71 is kind of like what I'm thinking about. But I think we could definitely see some movement in this stock. And I like Nike in the retail sector. Software sector, best of breed, Salesforce.com. These guys are a juggernaut. They do a phenomenal business, and the stock has been languishing at this, $260 range for a long time. Now, today they just did a buyout. They just did some merger activity. They bought out a firm called Bluebird, which is a leading AI-powered prospecting platform. So the stock is weak. But if you look at what they said on May 25th, they came out and they said that they're raising their full year 2026 view to $11.27 to $11.13, which was 10 cents better on the low end. So that's positive. And the major brokers do have, elevated price targets on the stock. So I look at Salesforce.com, and I think there's a real opportunity as we head into earnings. If you can get in the 250 area, I remember earnings don't come out till the end of this month, and this stock typically likes to walk higher into earnings. So take advantage of this weakness that you're seeing and use this as an opportunity to take a position and for momentum in the near future. But Salesforce.com is the other stock I like, Emily.
Bill, you're looking at retail, Nike with that one, and software, as you mentioned, best of breed with CRM. Steve, I will bring it back to you. I'm going to ask you on both fronts. One, what do you think about those sectors and stocks that Bill mentioned? And then what are you seeing? What are you looking ahead to? What are areas of opportunities that you're going to be keeping your eye on looking ahead, end of the summer and going into the next quarter?
Yes, the soft drinks group within the S&P 500, which of course PepsiCo and others are, including Coca-Cola, are a part of, has been a group that's sort of been in a consolidated pattern for a while. Well, I'm looking at this group right now. It's literally been flat for a very, very long time. When I say flat, it's at a trading range, is what it is. But it keeps coming down, the group itself, and testing a sort of a support area. And you're seeing that in Pepsi as well. It's come back down after that gap up in the middle of July. It's pulled back quite nicely, and I think it's probably, given what trading today, it's going to fill that gap. Technically, that's always a good thing. When a stock fills the gap, when there's been a gap up, so that's a possible opportunity to get in there. Another area we look at technically on PepsiCo is there's a divergence on one of the most popular indicators, the moving average convergence divergence, and that has diverged up very nicely since the beginning of July. That's an opportunity there for folks to get in. Possibly, looking at the price chart here, the price action itself has dropped down below its 21-day moving average, but it's actually sort of floating around near the 50-day average. So that's a good entry point roundabout. This is the 135 level where it's sort of floating down at the moment. As far as the rest of the group is concerned, when I look at the other stocks in there, there's not the same sort of clarity that you see with PepsiCo. When I look at Coca-Cola that's in there, it's very strongly down, which gives you an idea of how diverse it can be between these rather large S&P soft drink companies. The other stock that's in there, which is Keurig Dr Pepper, has a very similar pattern to PepsiCo until we got to July, and then PepsiCo sort of took off with that gap up. So PepsiCo's still looking a great stock, and the group is holding up okay. Bill, I'm going to talk about their Salesforce. I like Salesforce. I mean, not only is the company a juggernaut, which it is, the chart pattern itself and the way this stock is playing out, it's been hitting a sort of a recent low point, which was at the end of May when we, last time we did a broadcast at the end of May. It had come down with a pretty good low point, came back and tested that in the middle of June, came back and tested it again in close to the middle of July, and it's coming back down now to test it yet again. So that many tests at that support level, which is around the 252, 54, 254 level, is a good sign. Once you start to see a bounce off of that level, then traders are seeing that. They can see that. They can see where that support level is. They know there's a possibility that this is going to bounce off of there. And the other key thing I noticed in here was this group itself. The S&P software group is a stellar performance. I mean, it's part of the application software. I mean, the group chart is fantastic. So this group has the ability to help carry Salesforce higher from its current point. Other groups I've been looking at, when I look into my group analysis here, interesting group that's still holding up really well is the S&P Broadcasting Group. Now, it only has one stock in it, so it's not really a good. You can't do group analysis when it's one stock. The stock of the group look the same, but Warner Brothers is on a sort of 40-degree slope up, and even with the recent pullbacks, it is still powering up strong. Money's flowing into the stock. So as a stock, that's looking pretty good. The other group that, and again, this is a rising group, which is not that common at the moment or in the last few days, given the market. The S&P Communications Equipment Group is moving up nicely as well. It popped up. That's got stocks in there like Arista Networks, Cisco, Juniper, companies like that. Juniper, of course, has had a pretty good move to the upside in the last few days. So that group is still looking very strong. Again, that's the strongest technology group within the S&P 500.
So I guess there's a second there for Salesforce. And Steve, you mentioned you continue to looking at that soft drinks group in the S&P 500. PepsiCo, still a strong contender for some opportunities. You did mention, the S&P Broadcasting Group, or basically just Warner Brothers, and S&P Communications Group, the Arista Networks, Juniper, and the likes of those. Before I ask Steve for any additional analysis we may be missing, Bill, jump in on any of those. Any thoughts on what Steve just mentioned?
Listen, you can never tell what's going to happen with the markets. You always got to worry about multiple macro and micro factors. And I do look at, we're not going to have a Fed rate cut in August because we get the Fed meeting, but we will have a meeting in September where it is possible. If you get a rate cut in September, it's going to lift all boats. You get a changing of the tariff policy, it's going to lift all boats. So, while we're showing weakness right now, we're in a period of negativity. I kind of think that we're going to be able to paddle our way through this over the next couple of weeks. So, yeah, I kind of am excited.
And Steve, have we missed anything here? Is your analysis showing something we haven't talked about, anything that you were keeping an eye on?
Yeah, I mean, looking at, again, going back at the group and sector level, I was looking down at this is a time where groups that have been really knocked down, to a very low level, what might be coming out of that. And there's a lot of, noise out there at the moment. There are a few groups out there that are moving up just slightly, and that's something like construction materials. That group has got companies like Martin Marietta and Vulcan Materials. The group itself hasn't been doing a lot recently, but there's just signs in there that the money flow has been flowing into this group, into those two stocks quite significantly. And that's a possibility going forward. We might see some movement in that area. But other than that, it's very, very, volatility, even though things like the volatility index, the VIX, which is, a true measure of how volatile the market is, hasn't really been giving us a lot of information. It's been very quiet. The actual groups and sectors and stocks have been moving around quite a bit based upon the last sort of week's action. So I would expect we might see even more, volatility coming up in the next 2 weeks or so. I mean, the volatility index itself, the CBOE volatility index, is currently sitting. Yesterday was sitting down at around about 16.72. To give you an idea, back in early April, it was at 59, at 60. So, this is a little unusual. We like the volatility index because it gives us information when there's rapid movements. Volatility goes up, the market tends to go down. Right now, the volatility is only just beginning to tick slightly upwards. So there's a lot more room for things to go down if that volatility rises.
Steve, that really brings us right back around to the very idea at the top of the show, which is given periods of increased volatility, taking advantage of that, you need to be armed with the right information, combining NewsWare's fundamental and news-based and event-based analysis with AIQ Systems technical analysis. Those two things can go hand in hand in order for traders to navigate these times of increased volatility. And as we pointed out, maybe times of there's a lack of clarity with market moving events. So we appreciate your input and your expert insight again today on NewsWare's AIQ Markets podcast. Thank you again to our special guest, Steve Hill of AIQ Systems, for joining us today. Steve, thank you again.
Great. Thanks for having me again, guys.
And Bill Olsen, our NewsWare's Trade Talk trading anchor with 30 years of institutional experience. Thank you again for your expert insight today.
Anytime. I'm more than happy. I'm more than happy to come on these podcasts, Emily.
If you would like to learn more about AIQ Systems, go to www.aiqsystems.com. And of course, to learn more about NewsWare and sign up for a free trial, go to www.newsware.com. Again, I'm your host, Emily Advani. Traders, you know what to do. Let's go out there and make some green.